Welcome back to Liberty and Finance. We're glad to have a first-time guest today. David Rhodes is the Executive Chairman of Empress Royalty. We are here live at the Rule Symposium on Natural Resources Investing in Boca Raton, Florida. We've been bringing you interviews throughout the week with executives of the representatives of the presenting companies there. Rick Rule, as you know, hand chose your company, Empress Royalties, to be among the select few that are here, unlike most industry conferences, which is open to anybody who can pay the fee for being a presenter or exhibitor. And that is always intriguing to us because we try on our channel, Liberty and Finance, to bring quality information and quality opportunities to our viewers. So one of the things that noticed about your name of your company, Empress Royalty, is the word royalty. And our viewers are familiar at an introductory level, at least, with why royalty companies are different from, say, mining companies or exploration companies, that sort of thing. But really want to get back, when we can, to talk with you about the inflation impacts in the environment we're on royalty companies. But first, give you a chance, David, to just let us know in a nutshell what is unique about Empress Royalties and how it came to be, and why our viewers should be aware of it as an opportunity.
Great. No, thank you. Thank you for your time. Thank you for this opportunity. So Empress is only 2.5 years old as a listed public company. The idea behind Empress is 5 years old. So part of my main job is really working for Endeavor Financial, which is one of the largest advisory boutiques in the mining sector. And that business really provides financing for mid-tier and junior mining companies. So if you're looking to build a mine globally, you come to us to get the financing. And 5 years ago, we saw that the big royalty and streaming companies were getting bigger. Their ticket sizes going from $50 to $100 to $200 million ticket sizes for investment. And no one was doing the small sector. So these are the small 20 million and 10 million and less size investments in the royalty and streaming space. So as a business, we had this gap. And we thought we can either find people, you couldn't find anyone doing it. So, a bit like most people say, if you can't find someone to do it, you got to do it yourself. And that's why we set up Empress. Empress has purely been set up to do the small, mid to junior, $20 million less size investments in the royalty and streaming space. And we brought the team, the team you'll see, and I can go through it in detail as well, have all got a history. We've worked with them before. We know them. We put the team together of people we can quickly work with because we've got expertise working together. And it's very much an approach of looking at producing or near-term producing assets. So we're not looking for 10-year paybacks or 10-year hope that they're going to be a mine. We're looking at mines that are already producing or very near-term producing. So revenue is our key driver in our business. And gold and silver, which you'll talk about the macro side of that. So very much focused gold and silver, revenue or very close to revenue producing assets. And as a result of that, over the last 2.5 years, we now have a portfolio of 3 assets, all producing, all revenue generating. And we're just on that bottom of the curve up of that revenue production.
So just as a reminder, because we have a lot of new subscribers, 90,000 plus, and thank you everyone for pushing the subscribe button as you're watching this. The function of a royalty company is to help, you can say it better than I can, but help companies that need funding for their operations to get that funding without necessarily diluting their stock or having to go into direct debt, that sort of thing. So can you talk to us about why royalty companies are attractive to these other operating companies that need the funds?
So we are very much a creating royalty company. So we go out to the mining companies, we look and say, you got financing requirements, you got financing needs, we can help you. So we put a solution together for them. That's different to some other, the streaming royalty companies, where they just buy streams and royalties. So they're trading them, as we call it. We're actually creating, which is quite unique in our space. And so we go out to these small public, some of them are private companies, and say, okay, you need 10 million, you need $20 million. We'll give you that investment to expand your mine or develop another ore body of your mine. And then you just pay us that revenue, percentages of that revenue, either in actual gold or silver, or actually as a royalty, as a dollar payment over the life of their mine. So it's slightly different to other royalty companies out there because we're creating them. It is hard work, obviously, creating anything, negotiating term sheets, doing the due diligence. It takes longer. It is more time consuming, but as we can talk about it later, we have superior returns as a result of it. All that hard work means you get better returns on the investment we make.
wanted to ask you specifically in this higher interest rate environment than what we've seen over the past, 3 or 4 decades. We've now seen a spike in both inflation and interest rates, and wanted to understand from an investor standpoint, if you're looking at choosing between, say, an operating company versus a royalty company, do royalty companies have an advantage as far as not bearing the direct burden of higher maybe operating costs that happen due to inflation?
And I think that's one of the key advantages and why quite a lot of the royalty and streaming companies have done so well over the last 10 years. You look at the charts for other companies as well as ours in the marketplace. So obviously inflation is hitting everything. Any manufacturing, any mining company, just not the wage inflation, it's the cost of goods and services. So that's squeezing your margin unless the price goes up. And obviously, the dollar weakness, which we're seeing, is improving the gold price. We'll talk about that as well on the macro thoughts of it. But the margins are getting squeezed. The one thing in a royalty and streaming company is the margins are your team, which is 5 people. So your main cost there is really your team that are managing managing and running the company. You don't have cyanide, costs of cyanide, costs of your fuel. You don't have huge staff costs. So we can keep, as an Empress, and most royalty companies, our actual cost base very low, not a big inflation factor in our business. And also that helps in the sense that our actual burn rate is low. So as our revenue comes in, it's going into our treasury. It's actually funding the business for the next growth phase, rather than actually funding just the business, keeping operations. And that's the key value and that's why a lot of people invest in royalty and streaming companies, because we have in effect outsourced all that hard work of mining, exploring, digging it out to the mining company. That's outsourced. We don't have any of that risk. We just get that revenue coming in on a monthly or quarterly basis. So it's really outsourced.
Can you talk to us about the environment that we find ourselves in right now? There have been people waiting a long time who are bullish in gold and silver, thinking that in a fiat currency dominated world, debt dominated, there's weakness there. That whole system has various points of severe risk, including the banking system and lots of other aspects of it, but that metals historically have shown their ability to provide meaningful diversification of people's investments and that sort of thing in times of trouble, and whether it's stagflation, environment, or whatever. But can you talk to us about? And there's also been some rather confusing statistics we've heard as far as depletion of above ground stockpiles, reduced availability on the major metals exchanges of metal that's readily available, and yet the price, at least for silver, for example, has lagged gold to near all-time highs, but not much more than it had in the past. So it seems like it's like a lot of people who are holding metals are holding their breath, waiting for what they anticipate to be, if natural things play out, there would necessarily be a big move because of supply and demand. What's your view of the industry in terms of supply and demand of the metals, or even backing up to supply and demand related to exploration and development and mining versus actual industry and investment demand?
Quite a lot of questions in that. So I'll do an overview if that's okay. So base metals, a project in base metals is $1 billion to build a project. So a lot of capital in mining terms, that is. I'm not talking .com terms, but in mining terms, $1 billion of raising capital to do a new base metal mine is a lot of capital, and capital is in short supply in the mining space. So you're not getting the base metal projects being built. And that's where you're getting the shortages. Everybody's predicting copper, shortages, nickel shortages, because, you can't build. And it also takes 15 years from the discovery to actually building a new mine. So that's a 15-year time lag. So if there's a shortage of copper, you're going to be 15 years actually filling that supply gap. So that's where the business is very cyclical. Now, I've been in it over 25 years, and it's a cyclical business. You've got to get used to that. When prices are high, everybody builds mines, and then guess what? You oversupply, and then it comes down, and then there's undersupply, and then off you go again. So you just got to manage the cycles, and that's the beauty. If you've been in the business, you understand the cycles. But that's base metals. It's different to gold and silver. So what we're seeing, though, is, and why the industry, I should say, is excited about, copper, nickel, take an example, the battery metals, is that the population is growing and growing and growing. And, you've got people like China, for example, where, the quote today was 500 million people have gone from being, agricultural to suddenly being, having wealth. And guess what? We all want TVs. We all want this. We all want a lifestyle. And you're seeing because as a nation and the world, we've done well to give people a lifestyle. People have, there are starving people, sadly, but there's a lot of people in wealth. They want to keep their wealth. They want to have the next toy, want to have the next X, Y, and Z. All of that uses base metals, copper, electrification. So there's a fundamental, huge demand for metal, and it's increasing with the population growth, and the population is growing, growing, growing. So that is why there is such an excitement about the fact that there hasn't been a huge investment in base metals. There is a growing population, a growing need for the metals. And obviously EV batteries, they use up more copper, more metals than a normal car. So there's this huge demand growing up. And that's where people take the view that when that balance, and it is very closely balanced, is definitely there's going to be a huge supply shock in the marketplace. And that's when the price will go. And in my businesses, if you said where most people are looking in base metals, it's obviously, some of the battery metals, but copper. Mm-hmm. So there's a huge amount of investors looking for good copper assets because they believe there's going to be this huge supply gap and the price will be off to, and some of the people say $5 a pound, $7, and it just goes and runs. Mm-hmm. We'll see. But that's never happened. So it really is showing that the fact of, how, the world is growing, they need copper, they need these metals, but there's not been the investment in that. Gold and silver, it's totally different in that sense. And that's very much driven by US dollar weakness. And the speeches we're hearing is all about how the dollar has to, is going to collapse, whether it's because of the BRICS and what's happening with the other nations ganging up against the US dollar. Saudi Arabia being one of the main guys, which is pretty fed up about how they've been treated. Mm-hmm. I mean, if you think they're the largest oil producer in the world and we're saying to them, we're going green, we're doing solar, they're not happy. You're cutting them out of a huge amount of their business going forward. We're all going green. No petrol cars by 2030 if you're in Europe. Well, they're not happy about it. So they're ganging up to try and say, we don't want to go green. We want to use petrol because that's their lifeblood. And people are forgetting about the politics about that. So that we believe, and I'm hearing in this conference, is going to weaken the dollar. Weak dollar drives gold and silver because it's cheaper to buy and also it's a store of wealth. So the general theme I'm hearing here at the conference is start building up your dollar, your reserves of, gold and silver, because there'll be a great store when the dollar deflates.
Well, Empress is helping the smaller companies, it sounds like, to do that, to start helping Correct. To fill that gap and to provide for that increasing anticipated demand. It's going to be interesting to see how things play out, given that time lag that you've described. But it sounds like, is it the case that as the base metal mines are developed, that many of those have multi-mineral deposits, and there may be precious metals along the way with some of those. But again, there's that time.
There's a time lag, yeah. So I mean, Empress, you mentioned that we're a precious metals play. So any move in the gold and silver increases our revenue. So our revenue should be, we're about $2 million historically in revenue. We're going to be $7 million this year. So you can see the huge uplift in value. And we believe when the market sees that and sees the money in the door coming into the treasury, then we'll get re-rated because they can actually see the money coming in. And you can compare our metrics to other royalty and streaming companies, and it's usually a 10 times multiple of revenue. So we go from our 30 million market cap now, if we've got 7 million coming in this year, in theory, using the metrics of we should be a $70 million market cap company. And then we're going to 10, and we're accelerating and developing our business beyond that. So it's simple metrics.
I imagine your royalty and streaming arrangements are case by case, so this may not have a general answer, but I'll ask a specific question and maybe there'll be an answer. When you do provide financing to a company that's going to be creating a stream of, say, gold or silver, and then you agree to be paid in the metal itself, is the contract typically written in terms of number of ounces per year or something like that, so that if the price of metals goes up, you also benefit from the rising price of metals directly in that stream becomes more valuable?
Correct. And exactly that. So it's a percentage of production.
A percentage of production.
So it may be 5% of your gold production will be paid to us on a monthly or quarterly basis. So we get that gold coming into our gold account. And then we obviously, in some cases, we convert it into dollars. In other cases, we keep it depending on when it's needed, in that sense, for future investments.
Well, we miss all of you here who aren't here with us in Boca Raton, but remember, you can sign up for the recordings of this conference for 6 months. You can hear all of the speakers, the keynotes, and the presenters, and the exhibitors, and you can refer to that because it's too much to take in all at once. We're just trying to give you highlights here and snippets, and very grateful for David Rhodes, Executive Chairman of Empress Royalties, for joining us here on Liberty and Finance.
My pleasure. Thank you all.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for July 31st through August 6, 2023, while supplies last. This week we featured 2023 1/10 ounce gold eagles at just $37.50 over melt. The gold eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1/10 ounce eagle is additionally sought after for its high degree of flexibility and liquidity. Like the 1 ounce eagle, the 1/10 ounce eagle is 22 karat gold strengthened with copper. It's 1/10 of a troy ounce of gold, comes 50 to a tube, 5,000 to a box, and is available at just $37.50 over melt while supplies last. Finally, the Gold Eagle is IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.